Good evening, and today's session would be on guarantee of profits. So in guarantee of profit, what does it mean? Basically, sometimes in a partnership business, one of the partner or any partner might be given an assurance that in any year, his profit, which he will get as a share of his profit, would not be less than certain amount. So every year the net profit is going to vary on the basis of the performance of the business. So in a particular year, if the net profit is lesser, then in that case, what happens is that the share of profit would be less. At that point of time, this particular guarantee of profit would trigger, and the partner would be entitled to get that guaranteed amount. Like for example, if there are three partners A, B and C, they are sharing profits and losses equally, and during the year the net profit was 1,50,000. Then what is the share of profit of each partner? It is 1/3 of 1,50,000, 50,000 each in this particular year. But suppose B was given a guarantee. So we are talking about B as the guaranteed partner. He has been given a guarantee that he will get guaranteed amount of say rupees 60,000. So during this year, what happened? Because the net profit was 1,50,000, share of each partner came to only 50,000. At this point of time, the guarantee of profit will trigger, and B has to be given rupees 60,000. So what happens? You have to, whenever there is a guarantee of profit in the question, first thing you calculate the actual share of profit and see what is the actual share of profit which the partners are getting. Then for the guaranteed partner, whoever has been guaranteed, for him you check, compare the guaranteed profit with the actual share of profit. If the guaranteed profit is more than the actual share of profit, then obviously the guaranteed profit would have to be given to him, because his actual share of profit is less. Like in this example, actual share of profit comes to only 50,000, but he was guaranteed 60. So he has to be given 60 as he was given the guarantee. But if the guaranteed profit is lesser, which means actually the actual share of profit during that year was more. So for that, let us take example. If the net profit was 3 lakhs, in the same case of A, B and C, what would be the share of profit? They were equal partners. So it would have been 1/3 of 3 lakh, 1 lakh rupees was the share of profit. And B was guaranteed 60. So this is a case where his guaranteed profit is 60, but actual share is 1 lakh. So when he's getting more, you can ignore the guaranteed profit. You can just give away the profit in the actual profit sharing ratio. Got that concept, everybody?
Yes. Can you explain the previous one again?
This one?
Yes.
Okay. So in a particular year, say year 2019, this particular firm of APC had net profit of 1,50,000. The profit sharing ratio of the partners were 1:1:1. Therefore, what is the actual share of profit? 1/3. 1/3, 1/3, 1/3. So 1/3 of 1,50,000, each partner would get 50,000 as their share of profit. But in the partnership agreement, A, B and C had agreed that B would be a guaranteed partner and he would be given a guaranteed amount of 60,000 as a share of profit. And in this particular 2019, what has happened? His actual share is only 50. So at this point of time, the guaranteed profit would get triggered, and he will be entitled to not 50, but he is entitled to now 60,000. Got that?
So how will he get the extra 10,000?
I will tell you that. I'm coming to this point. You understand? This is clear.
Okay, yeah.
Whereas in 2020 they had very good profit. They got 3 lakh, and the share of profit for each partner was 1 lakh. Now guaranteed profit was only 60. Therefore, here what would happen? Don't bother about the guaranteed profit. He is getting more as his actual share. So give away the actual share of 1 lakh to A, B, and C. Only this part. Clear?
Yes.
Now, coming back to this. Once you know that the partner was guaranteed profit and now the situation is such that his actual profit is lesser, then he has to give the guaranteed profit. Who will give the guaranteed profit? From where will that guaranteed profit come? It depends upon the agreement amongst the partner. They might say, one case, that A has guaranteed. Then if A is guaranteed, the whatever is the deficiency, we call the difference between the guaranteed profit and the actual profit as deficiency or deficit. Deficiency or deficit, which is nothing but guaranteed profit minus actual profit. So in this case, in this example, 60,000 minus 15,000. So deficiency in the profit, so the guaranteed profit was 10,000. So you have to refer to the question, that particular question that has been given to you, and see who has guaranteed. First example is where A has guaranteed. If A has guaranteed, then what would happen? A has to give from his share 10,000, which we will add to B. So when you prepare profit and loss appropriation account, what would happen? You would have 1,50,000 as the net profit, which when get distributed here, you write to net profit transfer to A has guaranteed. So A's share of profit was 50,000. But out of that, he has to give for deficiency of B 10,000. So he will get 40,000. For B, he will get 50,000 plus the guaranteed amount. He was given guarantee by A. So he will get the deficiency from A 10,000. So he will get 60,000. C is not involved in this guaranteeing business at all. So he will get his share 50,000. So see, 1,50,000 got divided in this manner. Is that clear? Is it clear?
Yes, ma'am.
Second case, in the question they might say that the other partners A and C have guaranteed to share that equally, the deficiency, or in a particular ratio, any ratio, 3:2, some ratio they have said they will share it. Then in such circumstance, what would happen? Your profit and loss appropriation account, here you would have by profit and loss account 1,50,000. Now suppose we'll take the case of equally. So how much was the deficiency? 10,000, which has to be given equally by A and C. Means 5,000 would have to be given by A and 5,000 by C. So net profit transferred to A, 50,000. From that he would give from his share 5,000. So this year he will get 45,000 as a share of profit. B would get 50,000. 1 he will get from A 5,000 and from C 5,000. So that would make up to 60,000 for him. Whereas for C, he had actual share 50, but he is giving from his share to B 5,000. So 45,000. So when you total up, you see that net profit of 1,50,000 got divided in this manner. 45,000 to A, 60,000 to B, and 45,000 to C. Is that clear?
Yes, ma'am.
Suppose it was a particular ratio, that 10,000 divide the ratio. So 10,000 3 is to 2 ratio means 6,000, 4,000. So we would subtract 6,000 here, 4,000 here, and add 6,000, 4,000. Ultimately, you are ensuring that B gets 60,000, and what is the deficiency, how it will be shared will be given in the question. Read carefully what they have given and accordingly treat it. Equally in a particular ratio or by one of the partner, that on that basis you take from those who have guaranteed and give it to the person who has been guaranteed. That's the entire concept about the guarantee of profit. Now let's do some questions. I will send you a question now. Yeah. Can you all look at this question? Have you all got this? Can I start now?
Yes, ma'am.
So we will solve this question. See, this is an examination question. Vikas and Vivek were partners in a firm sharing profits in the ratio of 3:2. On 1st April 2014, they admitted Vandana as a new partner for 1/8 share in the profits with the guaranteed profit of 1,50,000. So she was guaranteed that every year her profit would be minimum 1,50,000. If the share of profit is more than 1,50,000, she will enjoy that. But if the actual share of profit is less than 1,50,000, she has to be given 1,50,000. The new profit sharing ratio between Vivek and Vikas will remain the same, but they decided to bear any deficiency on account of guarantee to Vandana in the ratio of 2:3. So how are they going to bear the deficiency? That ratio has been given. Vivek and Vikas will share that deficiency in 2:3 ratio. And they've said the profit of the firm for the year ended 31st March 2015 was 9 lakh. Now prepare profit and loss appropriation account of Vikas, Vivek and Vandana for the year ended 31st March 2015. Got it? Shall we start? Taken the pick of this question?
Yes, ma'am.
Let's solve this question, understand the concept that we just learned. So, first we have to prepare the appropriation account, prepare the format. Heading Profit and Loss Appropriation Account. So we start the appropriation account with the net profit, and the net profit was 9 lakhs, profit of the firm, by profit and loss account, net profit of 9 lakhs. Now we have to do the working note for the same. Now we will take down the details here and we will start. Now what was given? Profit sharing ratio was 3:2. Vikas and Vivek. Vikas, Vivek, 3:2. 2. Then Vandana was admitted for 1/8 share, and deficiency would be shared in what ratio did they say? 2:3 ratio. 2:3, and she was guaranteed 1,50,000 guaranteed profit. And they said the ratio between Vikas and Vivek is going to remain the same. Now, let us first calculate. We know Vandana has to get 1,50,000 minimum. So let us find out what is her actual share of profit. So actual share of profit of Vandana. How much would that be? 1/8. Because they said Vikas and Vivek are going to share in the same ratio as before. It is going to be 3:2. So 1/8 is what she is going to get. 1/8 of 1,50,000. How much does that come to?
Will it be 1?
Oh, so not 1,50,000. It is 9 lakh. Huh? Yeah, tell me.
Yes, ma'am. Same thing. 9 lakh.
9 lakh. Sorry. 9 lakh. So how much would that be? One's two's 16, 4, 5's 1,12,500. This is the actual share of profit. What has happened here? She was guaranteed 1,50,000, but actual share of profit coming to 1,12,500. Now tell me, whether guaranteed profit has to be given, or is she to be told to take your actual share of profit and go? What should we do?
Ma'am, the other two partners have to give her in the ratio 2:3 because there's a deficiency.
Then has to be given 1,50,000. So we will have to find out the deficiency. So deficiency is guaranteed profit 1,50,000 minus 1,12,500. That would come to how much? 37,500. Or what we can do, another way of doing it is from 9 lakh, we'll remove off the 1,12,500 and the remaining we would distribute off. That also we can do. Okay. So this way if we go about, this is the deficiency. This deficiency has to be given in the ratio of 2:3. So far you are following?
Yes, ma'am.
So deficiency to be shared in what ratio? 2:3. So how much would Vikas give? 2/5 of the deficiency, 37,500. That would come to 5 ones are 5 sevens. 5. So 15,000 of the deficiency would be taken out from Vikas' share, and other person was, what was his name? Vivek. Vivek, 3/5 of 37,500. That would be 7,500 into 3, 22,500. So this is how deficiency is going to be divided. Clear? Now, we have to find out the share of profit of actual share of profit of Vikas and Vivek. Then from that we can remove this deficiency that they are going to give. So for that we know the net profit is 9 lakh rupees. But out of that we have to give to Vandana. Vandana's share is how much? We remove off the 1,12,500. 12,500 actual. So what is left is 7,87,500. This profit was going to get divided because they said in between Vikas and Vivek, they both are going to have the same ratio as before, and therefore Vikas's actual share of profit is going to be in the ratio of 3:2, means 3/5 of 7,87,500. And Vivek's share of profit is going to be 2/5 of 7,87,500. Are you all following? That would come to 4,72,500 and 3,15,000. Are the calculations clear? Any doubt?
So this is the actual amount that they'll get.
This is the actual amount. From that, they will have to give away 15,000 by Vikas. And from this actual amount, Vivek has to give away 22,500.
Okay.
Once you have finished noting down this, let me know. We will put it in the appropriation account. So this was the actual profit and this was Vanda's actual share of profit. And they said Vikas and Vivek are going to continue to share the same ratio as before. That is why this whatever is leftover profit belongs to Vikas and Vivek. So this is their actual share of profit. From that they will have to give up some portion which will make good the deficiency of Vandana. That's the logic here. So we are going to write these into the appropriation account. Shall we move over to appropriation account now? Done or still writing? So these amount will put it in the appropriation account now. This was the appropriation account we prepared. So we are going to write to profit transfer to, first one was Vikas's capital account. His actual share was 4,72,500. From that he is going to give deficiency to Vandana. Deficiency given to Vandana was how much? 15,000. So we subtract 15,000 from this. So he will get 4,57,000. Sorry, it is 7 not 5. 57,500. Then for Vivek, what was his actual share of profit we got? 2/5 of the remaining profit, 3,15,000. From that, he will give up 22,500. So write that here. 3,15,000 less deficiency given to Vandana. He is giving up 22,500. So 7,500 more means 2,92,500. Now what would happen in Vandana? Vandana's actual share of profit was 1,12,500. But she is getting her deficiency fulfilled from Vikas. She's getting 15,000. And from Vivek, she's getting 22,500. When you total this up, it comes to 1,50,000, which was a guaranteed profit. If you total this up, it will be equivalent to your net profit. So this is how net profit got distributed. Everybody clear? Any doubts?
Clear.
Everybody done? Any doubts? Let me know when we can move on to the next question.
Done.
Next question. Others done?
Yes, ma'am.
Yes, ma'am.
Next question is this one. This is also a Delhi set 1 question of 2013. This is also a big question where Ali, Bimal and Deepak, they're partners in a firm. On 1st April 2011, the capital account stood at 4 lakh, 3 lakh, 2 lakh. So this is a capital balance at the beginning of this year. Their share profits and loss in the proportion of 5:3:2. So profit sharing ratio. Partners are entitled to interest on capital 10% per annum. So you can calculate that on this capital. Salary to Bimal and Deepak at 2,000 per month and 3,000 per quarter. So Bimal has to get 2,000 per month, 2,000 to 12, 24,000. Deepak has to get 3,000 into 4, 12,000 as per the provisions of partnership deed. Further, Bimal's share of profit, excluding interest on capital but including salary, is guaranteed at a minimum of 50,000 per annum. So they have said he is to get a guaranteed profit. But while calculating the guaranteed profit and arriving at the 50,000, what you should do? You should not include interest on capital, but you include the salary. So share of profit plus salary should be equivalent to 50,000. Don't include interest on capital. And who is going to bear it? See, any deficiency arising on that account shall be met by Deepak. Only Deepak is going to bear the deficiency. Bimal is going to get it from Deepak. Ali is not involved here. Ali will get what was the actual share of profit. The profits of the firm for the year ended 31st March 2012 amounted to 2 lakh. Prepare profit and loss appropriation account for the year ended on 31st March 2012. Have you taken a screenshot of the question? So let's start. First thing what we are supposed to do, prepare the format for the profit and loss appropriation account. So you can write the heading if the name of the firm is given, write that name and then write the profit and loss appropriation account. And also year is given, like in this case, you can write for the year ended. In this case, it was 31st of March 2012. If year not given, write for the year ended and leave it dash dash dash. Don't forget to write the debit and credit and fill in the particulars and rupees column. We will be starting with the net profit. We'll write by profit and loss account, net profit amount of 2 lakhs. Now, we have to do the calculations. What all calculation we have to do? We have to give them interest on capital. We have to give the salary. And then we will come to that profit when we have to take care of the guaranteed profit. So first let us start with the interest on capital. So for that, first working note we'll prepare. The 3 partners are Ali, Bimal and Deepak. We will calculate the amounts. Start the working note number 1. Calculation of interest on capital. So look at the question. Capital balances were 4 lakh, 3 lakh, 2 lakh and interest on capital at 10% per annum. So Ali 10% of 4 lakh. That would be 40,000. Bimal 10% of 3 lakhs. Rupees 30,000. And Deepak 10% of 2 lakhs. Rupees 20,000. So total is 90,000. So this thing we'll put it in here. Ali was 40,000, 30,000 for Bimal and 20,000. So that comes to 90,000. Out of 2 lakh, 90,000 has gone as interest on capital. So far clear?
Yes, ma'am.
Next they said about salary. They said Bimal and Deepak 2,000 per month Bimal and 3,000 per quarter for Deepak. So let's give that to them. So right here. To salary, we're going to give to Bimal at the rate of 2,000 per month. That would be 24,000. And for Deepak, they said at the rate of how much? 3,000, right? 3,000 per quarter. So there are 4 quarters in a year. So 3,000 to 4, 12,000. So 36,000. So we have given away the salary. Now we have to do the calculation about the actual share of profit of the guaranteed partner, that is Bimal, and compare it with the guaranteed amount. If it is less, then we have deficiency, and that deficiency Deepak would give. So let's do the calculation now for that. Calculation for the guaranteed profit. First, we'll find out the actual share of profit. So each one of them. What is the available divisible profit? Divisible profit would be how much? From 2 lakh of net profit, we remove off 90,000 interest on capital and 36,000 of salary. How much is left? 1,26,000 from this means 74,000 is the divisible profit. This is the profit which has to be divided in the profit sharing ratio. Have they given the profit sharing ratio?
It is 5:3:2.
Oh. The profit sharing ratio is 5:3:2. So we'll start with Ali. Ali's actual share of profit is 5 by 10 of 74,000. So 0, 0, 22, 35, 37,000. For him, there is nothing to be done. He will get whatever is his share. He is not involved in the guarantee. Now we will go to Bimal. For Bimal, 3 by 10 of 74,000. How much is that? 0, 0, 12, 1, 21, 22. 22, 200 is what is his actual share of profit. And for Deepak, it is 2 by 10 of 74,000. 0, 0, 8, 14, 800. This is the actual share of profit. Now for the guaranteed profit, we have to take up Bimal. Bimal's actual share of profit is 22,200. Now next part. Bimal's actual share of profit, rupees 22,200. Now go to the wording and see what did they say. Bimal's share of profit excluding interest on capital but including salary. How much was the salary to Bimal? 2,000 per month? 24. So 24,000 is the salary. So total that up. 46,200. That they said is guaranteed minimum of 50,000 per annum. So that we have to compare with the guaranteed profit. He was guaranteed how much? 50,000. So actual share now including salary is lesser. So he has to be given the guaranteed profit. So there is a deficiency or deficit. How much is it? 50,000 minus 46,200. That would be 3,800. Got the deficiency? Is it clear?
Yes.
Now this deficiency, what did they say? They said any deficiency arising on that account should be met by Deepak. So Deepak was entitled to 14,800. From that he would give up that 3,800 which we would add to Bimal. Okay. So what we will do is we'll write here to profit transfer to Ali's capital account. Here for Ali there is no variation. So his actual share of profit 37,000 we would give to him. So we can write 37,000 directly here. Then to Bimal, his actual share of profit came to 22,200. So we write that. Add deficiency received from Deepak. Deepak is going to give that 3,800. So 26,000 he is getting. And Deepak actual share was 14,800. From that he is giving deficiency given to Bimal. He is giving 3,800. So he is only going to get 11,000. If you total this up, it will be equivalent to this 2 lakh. So this is how 2 lakh got divided. 90,000 is interest on capital, 36,000 is salary, and if you total this up, it is 74,000, which was the profit which got divided. Everybody clear? Any doubts? Yes, girls, clear? Any doubt?
Clear, ma'am.
Once done, please let me know. So today we learnt about guaranteed profit. And these two examples as previous examination questions, we learned different concepts, different ways in which guaranteed amount was given. In previous thing, we saw the guaranteed amount was given by multiple partners. But here, only one partner gave it. And also here, by calculating the deficiency, we had to take not just the share of profit like in the previous question, but we had to include the salary which was given, exclude the interest on capital, and then compare it with the guaranteed profit like this to get the amount of deficiency. And that deficiency was given by only one of the partner. So that's it about guaranteed profit. I hope the concept was clear to you.